Ladies and gentlemen, Greg Michalowski from ForexLive.com. Geopolitics is the order of the day in trading here today, and that's sending the risk-off trades into full motion and taking the Aussie versus US dollar and New Zealand versus US dollar to the downside. So let's take a look at those two currency pairs in this technical report. All right, looking at the 4-hour chart of this currency pair, we are seeing a sharp move to the downside. That move to the downside over today has come after the price did correct off of lows on Wednesday and then Thursday, back up toward the falling 100 bar moving average on the 4-hour chart, and also back toward the 61.8% retracement of the move up from the October low right here to the December high right here. Both those levels come in around the 0.6000 level, and we did move above it, as you can see. I'm not lying about that. Or going to say that it didn't happen, and the price did move above the 100 bar moving average in the process, but the selling has resumed, and we saw increased momentum to the downside as concerns about the Iranian invasion of Israel starts to weigh, and also the dollar, and that leads into the dollar buying and the selling in the New Zealand, selling in the Aussie versus US dollar. But commodity prices also moving to the upside with gold sharply higher. We're also seeing crude oil higher. So all that contributing to falls in the commodity currencies. Having said that, we are down testing the low price that we saw in trading last week at the 0.59364, and there is a little bit of a stall against that level. Currently trading at 0.5945, but if the price were to move below that level, that would open the door for increased selling pressure, and looking down toward this area right through here between 0.5851 and 0.58699 is the next key target area on the downside. Level was a floor through here before breaking below and using the level as a ceiling through here, before breaking back above and using it as a floor once again before sending its move to the upside through here. So that is what we have to look forward to if we are able to get below the 0.5936 level. On the top side, if the price does find support against this level, ultimately we're going to need to get above the 100 bar moving average. We're going to need to get above the 60 level, the 61.8% retracement, to increase the bullish bias. Let's take a look at the Aussie versus US dollar next, and similar to what we're seeing in New Zealand versus US dollar, this pair is also moving sharply to the downside and trading here today. Different from the New Zealand is that this cluster of moving averages did do its job pretty darn well yesterday, with the price moving above two of them, but holding resistance against the 200 bar moving average on the 4-hour chart before starting its rotation to the downside. We're seeing increased momentum as a result. Now we are coming down toward a support area. That support area is defined by different swing levels through here, here, and here, and here. And comes between 0.6442 and 0.6455. Also at that area is this trend line, which connects different lows through here. And as you can see, that level comes in just below the 0.6455 level. So that is this area is going to be our next key support. If we get below that level, opens the door for further selling pressure. We are back below the 61.8% retracement of the move up from the October low to the December high. That level comes in at that nice round number of 65. So for the New Zealand, we had 66. For the Aussie versus US dollar, we have 65. That level was also a low price that we saw earlier in the week here as well. So a dual level of resistance up there at the 65 level. As long as the price can remain below that level, then the sellers remain more in control. So there you have it, a technical look at both the New Zealand versus US dollar and the Aussie versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.